everyone. This is the Amateur Investors Podcast. I'm Chris Alaimo, and I'm here with my co-host, Ben Gassaway. We're really excited to be talking to you today about investing. Just a little bit about myself. I graduated from Rowan University in 2015 with a degree in chemical engineering, but I kind of really fell into a love or a passion for investing. And meeting Ben almost 3 years ago at this point, we always used to talk on the lunch break about, stocks we're looking at, how the stock market was moving, and various asset classes that we're investing in.
Hi, everyone. I'm Ben Gassaway. Thank you, Chris, just for extending the invitation to be a part of this podcast. A little bit about me. I graduated from Cornell University in 2018 with a degree in environmental engineering. I think as soon as I graduated, I immediately just started gaining an interest in public markets and finance. I'm now doing more of a business management role, sort of immediately foregoing my degree. So really excited to be a part of this podcast, and we're excited to take you along this journey as we learn more about investing and wealth preservation and wealth management. So thanks for watching.
Thanks for watching, everyone. We're excited for you guys to come along the journey with us. Have a good one. Hello, everyone, and welcome to the show. My name is Chris Alaimo.
And I'm Ben Gassaway. Together, we are the Amateur Investors.
This podcast is our open source journal of everything we learn about investing and wealth management.
We're here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path toward financial independence and financial literacy. Our mission is to build us up from amateurs to experts.
All suggestions are our own, and we recommend that you do your own research before taking any investment advice. See you in this week's episode. We hope you enjoy it.
Hey, everyone. Welcome to the Amateur Investors Podcast. This is episode 1. Really excited to be here with you all. Thank you, Chris, for just making this possible. I know we had talked about this sort of just as a pet project for a long time, but never putting pen to paper or Zoom to calendar. So for this episode, we're going to do a little bit of a Q&A style. Really just want to get a little bit of a high level overview just to let you folks know a little bit about us. We want it to be worthwhile for you to listen to us talk to you on a screen or in your ears. So really we want to make this show as relevant and accessible and also informative as possible. So if you have any topics or thoughts or questions, please hit us up on our social media platforms. We've got Twitter, Instagram. We'll have links in the show notes. So reach out to us. We're very responsive. We want our audience to gain as much value from the show as possible. So we hope you enjoy.
All right, Ben. So what's investing mean to you?
Wow. Right now, it is probably the most productive procrastinating tool I can think of. I definitely spend too many hours and too many late nights looking at charts and 10Ks and 10Qs, but that's not really what investing is to me. So investing to me is sort of the ability to really buy a business. I think what Robinhood has done, and that was really the opportunity for me to dive into investing. I had heard about Vanguard, Charles Schwab from my uncle, but when I had tried or wanted to build an account with the brokerage, the barrier to entry was pretty steep for like a middle schooler, high schooler, and just like broke college student. But what really changed the game for me was hearing about Robinhood. And one of my friends brought it up to me, and he was like, "Oh, Ben, you don't need any money. You throw $1 in there and you can start buying stocks." I was floored. I did not think that day would come true, because I'd just been working so hard to build money, to build capital to invest my money and to make it work for me. So since then, really what investing has evolved for me is buying excellent businesses around the world, and getting to capture some of those profits and just participating in just the entrepreneurship, and just some of the groundbreaking businesses that are around the world. You don't have to be a multimillionaire on the New York Stock Exchange to start buying stocks. Robinhood and even all these competitive brokerages remove the zero trade fees, zero commission. You can just jump right in and you're a stockbroker just like anyone else. So that's kind of why I'm excited about stocks, and that's what it means to me.
That's awesome. I know you hit on a lot of good points. I know for me, investing is basically using your money to make more money. That's just personally the way that I look at it. And, a bad thing is using your money and losing money. So obviously, Warren Buffett, I know most people have heard of him. If not, it's pretty easy to look him up. But world-renowned investor and stock market aficionado. I guess not even so much on the stock end. He's more of just building and, investing into businesses. But one of his rules is don't lose money. And his second rule was read rule number one again. So I think it's just very important that you're investing in things that, give you money in the long run. And there's many different ways to do it. That's the cool thing. It's like anything. You can do real estate. You can do investing in like hobbies, like sports cards. You can do investing in the stock market. You can do investing in your own business. You can do investing in yourself. There's many different ways to help you accumulate more wealth. Basically, that's just what investing is to me. So I guess, Ben, how do you see the current economy as of today, November 7th, 2020? And it's been quite a year, to say the least.
Wow. It is a year that just keeps going. And I feel that maybe 2020 is a year that will, continue into 2021. How do I see the economy to date? I think the most intelligent answer that I could probably conjure up is that I don't know. There are a few metrics that I follow to sort of get a gauge on, where the market is heading. And I'm talking specifically about, US markets. I don't look too broadly in macro trends just because it's hard to keep up with that, but that is something I do want to get better with. I have a few stats in the background. The economy, I think a lot of people tend to be drawn to the stock market as the measuring stick for how the economy is weathering.
Yeah, definitely.
How just what the economy is. I think it tends to be sort of this ethereal entity that people might not understand. And it's something I am still a student of and probably will always be. We just got the jobs report. Unemployment numbers around 6.9%. And the main thing that I look at, honestly, is the market cap to GDP ratio, which is Warren Buffett's ratio. The sort of rule of thumb there, if the market cap to GDP ratio is around 150% or to 70% being the most favorable for buying stocks, we're at 171%, meaning that stocks are as richly valued as they ever have been compared to how much money is in the economy, whether that's through consumer spending, through corporate production. So that's something that concerns me, that I think that stocks are sort of priced to perfection in the way that they need to just really grow their earnings like a weed. And the number one risk to this market still stands, in my opinion, as COVID-19. If we do not get a vaccine, and not even just a vaccine, I think the vaccine is sort of described as binary, where it's, you get a vaccine, it's cured, but that's not really the case. There's also the logistics behind the distribution channels. It could be several years. And I think what I'm sort of just thinking about personally, I think there's a lot of uncertainty in the economy. I think that in the age of technology and sort of the digitization and the forced, work from home and modernization for a lot of companies, I think there is a lot of opportunity in this market right now. But I also think there's equally, if not more, risk with that uncertainty from the impacts of COVID-19. So not a long-winded answer to say I don't know, but there's a lot of things that I'm watching just to see if any trends break. What about you, Chris? How do you see the economy today?
Yeah, so personally, kind of like you, I don't want to be a speculator, but I definitely think we're at a point where stocks they're very extremely or highly valued. I think in this day and age, it can kind of go anywhere and that's not really helpful. I'm kind of more on I'm invested in the market, but I'm more waiting and seeing for what I want to invest in going forward. Obviously, not to get into politics, but, we have impending who's going to be the president of the United States. Not that necessarily either candidate affects the stock market in a broader scale. A lot of people like to believe that's true, but the market is kind of the market and kind of does its own thing in a way. I do think on the long term, kind of touching on what Ben was saying, I think COVID-19 could very well start, another recession into a depression. So I know another Warren Buffett more mentality quote is, be fearful when others are greedy and be greedy when others are fearful. And I kind of don't know where we are on that trend. I think with prices of stocks being extremely highly valued, I think we're more on the greedy end than on the fearful end. But I think, as you can even see in March, I was buying a lot of things, not so much in March, because there's another saying, you don't want to catch a falling knife. As the economy's going further and further down, you don't want to be buying it on the way down and essentially losing money rapidly. But I definitely think, I bought a bunch of stocks in May and June, and I got a lot of that upside as it rode up to market highs in September timeframe, October timeframe, and even kind of now.
Even now.
Yeah, even now. So, I think there's going to be a lot of opportunity, kind of like what Ben's saying. With all this uncertainty, there's always opportunity or things that people are overlooking. I was looking for the longest time to kind of buy into the real estate market, but with interest rates dropping, when interest rates drop, it's kind of like a seesaw. As interest rates go lower, housing prices go up. And as interest rates go up, housing prices go down. And that's because you're basically offsetting the amount of money that it takes to buy the property versus the amount of money you owe in interest. So that's kind of where that seesaw effect comes. So kind of I'm waiting and seeing right now as real estate markets hitting all-time highs. There was another quote, and now I'm kind of just rambling, I feel, but another quote from either from Warren Buffett or Benjamin Graham saying, would you rather buy the same business for $80 million that's valued at $100 million, or would you rather buy the same business valued at $20 million, but it's worth $100 million? Obviously, you'd want the bigger upside of 20 to 100 million, even though you made $20 million or, a percent more money. You'd rather buy it at the lower end and get more of the upside. So I kind of see the real estate market kind of oversaturated, or at least the residential market, where I think the commercial market is going to see its crash, which is very different than 2008, which was a residential housing crash, where this is a commercial, real estate crash. So.
Yeah, a lot of variables at play right now. Chris, I want to ask you, we sort of had this question here where what is your personal investing mentality at this current moment? I think a lot of this really ties in together. So with sort of the uncertainty comes volatility. So I think that, they always say, I think this is a Game of Thrones thing, that chaos is a ladder.
That is.
So I think with, I'm really heavily invested in public markets. I have my 401k, I have a Roth IRA, and my own general taxable account where I do like sort of stock, individual stock picking. What I would recommend, and at the end of the day, our title is the Amateur Investors Podcast.
Yeah.
So take this with a grain of salt, do your own research, as with anything. Always question and find your own truth. But my advice at this point in time is to, I think, one, ensure that you have absolutely an emergency fund stashed away.
Yeah.
Before if you know nothing about public markets or investing or real estate, build an emergency fund, 3 to 6 months of, your living expenses, rent, food, what have you. Build that fund. And then I think from there is maintain, in my opinion, I usually maintain about 5 to 10% of my portfolio within cash. I know Warren Buffett was sitting on just I think $130 billion worth of cash. Mm-hmm. So he's thinking about having gunpowder in his armory for those opportunities. I am following him. I'm following Ray Dalio. I'm following a lot of billionaires who are just actively investing in the market. Yeah. They are buying equities. They are buying stocks. And even though the market may be richly valued, I think what I've found is that there are equities and there are companies who have been beaten down. There are companies who I don't think are priced for their growth. I don't think that they've fully been appreciated. So yeah, definitely. I think what's required is due diligence to find those cheap companies that Chris was talking about, that $20 million priced business that's worth $100 million. And I think it just takes patience. I don't think that you buying a stock today will prevent you from becoming a millionaire tomorrow or even next year. So if you can just find one stock, one good idea, and this is something that Warren Buffett says, if you can have just one good idea per year, that's a major success for him. So my advice, make sure that you have security in your bank account, and then have some cash on the side, and then chip away as you're investing, whether it's an ETF, and we'll have, I think we should probably have a show, an episode on that, just like ETFs, what are some of the investment vehicles to invest in. But have your emergency fund, have some cash on the side to jump on those opportunities, because they will come. Don't ever get the feeling of FOMO, fear of missing out. The stock market, as Chris said, will always just do its thing. It doesn't really matter what's going on around it. It does. I'm not saying it doesn't matter, but the stock market will always just do its thing, and you just need to read the tea leaves and do your due diligence. So that's my advice there.
Yeah.
What about you, Chris? What's your investing mentality right now?
Yeah, so like I said, I'm kind of in a wait and see kind of mentality right now. I've been slowly investing, and this is kind of alternative investing. I've been investing in sports cards right now, so that's kind of been a hobby of mine. It's like anything, you can go in blind and lose money, or you can do a lot of research. And by I mean a lot of research, like I'll spend a few hours at night on eBay looking up what prices of cards have gone. You know, are you want to invest in new players? Do you want to invest in old players? Do you want to invest in new cards? Do you want to invest in Pokemon cards? Do you want to invest in Yu-Gi-Oh cards? Like, there's a lot of research that comes with it. I know Ben is giving a smirk because, you know, it lit up his childhood of Pokemon and Yu-Gi-Oh and stuff.
Oh my gosh, Chris, I still have all my Yu-Gi-Oh cards.
Yeah,
If you want to buy some off of me,
I'll let you know if there's any
it's a
good
seller's
ones.
market.
But yeah, no, it's been really cool. I've been doing little things in the card market front. It's a lot cheaper to get into than, let's just say, real estate. And I'm kind of waiting and seeing in the stock market. So I'm still investing, and obviously I'm investing every pay period into my 401k. So I still have exposure to continuous investing in the stock market. But yeah, that's kind of my mentality right now. Kind of wait and see for the stock market and real estate. I'm kind of doing more hobby investing right now, and in the long term, I hope to make money on that.
That's excellent, Chris. You're becoming an amateur, soon-to-be professional commodities trader.
Yeah, I mean, hey, they say that you know, a millionaire normally has 6 streams of revenue. I'm just trying to build all those different streams slowly and steadily. It's not a race to the finish. It's kind of more of like tortoise versus the hare, and definitely, you know, I'm the tortoise right now. You know, just slowly digging along.
The tortoise with a Bloomberg terminal. I love it.
Yeah, exactly. So Ben, what's your mentality? I know you touched on it a little bit there.
Yeah, I think I touched on it a little bit. Really, I'm just trying to make sure I have some security, and also just like flexibility. I think having some liquidity in the form of cash is really, to me, an asset class to be investing in right now. Is sort of that opportunity cost of like investment growth versus just like, you know, wealth stagnation being in cash. So I'm balancing that. But what am I guess really what that question boils down to is like, what am I preparing to invest in, or what am I invested in? Really haven't made any major moves since like the March, April time. I had accumulated quite a bit of cash just because I've been watching just the Shiller's PE ratio just go up. I'm like, I'm going to be ready to buy when this thing crashes. And I didn't realize it would be in the form of a pandemic. So capitalize on that opportunity, which is both bittersweet. It is a sad time for the world right now.
I agree.
But I think at the end of the day, you need to do what you can to build security for yourself, for your loved ones. I think that stocks are good means with which to do that. What am I investing in? I am investing in, it's probably cliche, but I'm pretty heavily invested in tech. And I'm investing in tech and sort of e-commerce spaces, both US and China, for companies that are just sitting on an exorbitant amount of cash. That's what I'm looking for. I'm looking for companies with really low debt, and I'm looking for companies that are sitting with a lot of cash on their balance sheet. And the reason why I'm doing that is, let's say we do go into some modified form of a lockdown, or just like globally, this escalates even worse than we had originally anticipated. With companies that are sitting on a lot of cash, I've been trying to run sort of like zero revenue models in which the companies make zero money for X amount of time. And I want to know how long, based on their annual or monthly expenditures, how long will that company survive before it goes bankrupt? Mm-hmm. And with these companies having so much cash, I think, you know, like Google, for instance, they're growing their top line, their revenue like a week. It's insane what that business is able to do. It's just a transactional, you know, you just type in information and they make money into the Google search bar. So that's an incredible business model to me. Having cash and having the flexibility in sort of these uncertain times, and also just like a low cost of capital in tech, you know, you're not, as a software company, your assets are your software engineers. So you put an Apple Mac in front of that software engineer, and that is your asset. It's not like you're building a new airplane. If you're Boeing, that you're not going to be able to disrupt Boeing overnight.
Yeah.
So I'm looking for those companies that can sustain themselves sort of in a vacuum, but also the cost of capital and the cost to scale is like zero. Like their margins are just like 70, 80%, their gross operating margin. So it's just, there's a ridiculous amount of flexibility in those types of businesses. I'm looking at Google, I'm looking at Facebook, and on the e-commerce side, internationally, I'm looking at Alibaba, which just had a major pullback, and also JD.com. So two major e-commerce players, close to $1 trillion in US dollars valuations, and it just pulled back. So I'm looking to probably build up on my position on both Alibaba and JD.com right now.
That's awesome. Yeah.
What about you, Chris?
Yeah, so kind of like I said, I'm kind of waiting, seeing in the stock market. I'm doing more sports card investing as we speak. I'm definitely kind of like what you said. I'm looking more on the tech side of, if this gets worse, companies that kind of, like you said, operate in a vacuum and that don't have to put out more have higher expenses in order to keep running. Like you said, like the tech companies. The only thing that would really affect them if there was a COVID-19 of the internet, that would be the bad version of it. But there's no crazy global internet virus running around right now. So those companies I see as long-term protection until that happens. I still think they're a little overvalued in what they are right now. But, if things get worse for the rest of the economy, they might pick up because viewer attention or, active daily users might go to those platforms as things get worse. So yeah, kind of on the sidelines right now, but waiting to see what happens. So I guess now we're going to start wrapping up the podcast. I hope you guys enjoyed episode 1. We're going to hope to come to you with weekly podcasts breaking down various topics and really trying to teach our audience about the different fundamentals of investing. We'd love for you guys to reach out to us on any of our social media platforms, YouTube, Instagram, Twitter, or Facebook. We have a Facebook group as well. So thanks for listening, everyone. I guess, Ben, do you have any closing comments with that?
Yeah, no, thank you guys for watching or for listening or whatever sense you want to use to observe us. Really, please give us some feedback, give us some thoughts. We want this to be a productive conversation. I mean, Chris and I are happy to talk to ourselves, one-on-one till the end of time. Yeah. But if there's a way that we can, do the research for you, or to, find the right people to come on the podcast, like we'll have guests. We really want to do that. So participate, reach out to us. Like we'll absolutely answer. We want to hear your thoughts. We're really excited about that aspect more than anything is to be able to just expand this conversation beyond just Chris and I. I love you, Chris. It's not just you. But no, we're just thankful for our listeners, and we hope that you'll follow us again for episode 2. So thanks for watching or listening.
Have a good one, everyone. Catch you later.
Take care.